and doing taxes. So before we start, like I said, everybody can see me and hear me. I won't be able to answer any questions from the chat. We will take questions at the end. So if you have questions, while you can put them in the chat now, just know that we won't be responding to any of the questions until we get closer to the end. Right now, I kind of want you to just sit back and think, what was your reason for signing up today? What do you hope to take away from this meeting today? And that you can kind of, if you want to just hit your space bar and come off mute real quick and kind of give some input, that would be fine.
Well, I could start. I feel like every year when I'm trying to prepare to get my taxes done, that there's no real standard organization on getting the information together or tracking it so that it's easier to submit. So I try to use QuickBooks, and that just, I don't know, I'm not even sure it's set up right, so.
Okay. We definitely will talk about that. Anyone else? Going once, twice?
I just feel like I can't supervise effectively the people that are helping me with it, not you, but like the assistants and the virtual staff that I have trouble like making sure that they're actually doing it properly, and then I end up having to redo a lot of things. So kind of just the management of it, I think.
Okay.
Me, I've had great success with Excel. I've massaged the spreadsheet over 10 years, and every year I say, okay, I'm going to start with the system, and I end up doing double bookkeeping for the first month of the system, and then I end up getting frustrated and just going back to the old way. So for me, it's hard to transition away from my system I know well to something where I can take advantage of something else.
Okay. All right, well, hopefully we'll be able to kind of address some of these. If we don't address them, then my contact information will be at the end. So if you have any questions, please reach out, for help. We don't want anyone to be out here kind of feeling like they don't have any help. There's help out here. All right, so tonight we're going to talk about, it's just going to be 6 quick tips for bookkeeping for real estate investors who are doing their own bookkeeping. Again, this can be, most of my conversation will be around real estate investors, but I'm taking these earrings off. I was trying to be cute with my earrings, but I keep getting caught in my shirt. But any service-based industry, this information will still help them as well. So some of you, let me hear some quick responses as to why did you get into real estate? Anybody want to say why they decided real estate was the way to go versus something else? No one? Okay, well that's fine. That's fine.
Hi, this is Nancy. If I can say, I think what I got into real estate is I think as an investment vehicle, it was something that I could understand a little bit more than, let's say, equities or some other things where I knew that somebody else was going to be managing it. Mm-hmm. And so it was, and so that was part of it. It was something like I could wrap my head around, right? It's not conceptual. It's actually, there's physical and it happens in space, right? In real life. And I think the other aspect of it is, as a real estate investor, I like, having the properties renovated and being able to provide a home for people. So there's also a psychic reward. At the same time, certainly it's an investment, so I want to make money, but it's also a psychic reward in terms of turning a property into something, an environment or a home that somebody could live in.
Okay, so in the end game, it was to help out someone else, as well as to be able to make some money kind of for yourself. That's what I'm hearing.
Yeah, and then provide great environments for people.
Right, and that's what we need, great environments provided everywhere.
Yeah,
and I'm sure most of you all, the reason for getting into the real estate business was like Nancy said, to make a little bit of money for yourself, but also you want to be out here, you want to help people. There's housing for everyone, and everyone needs housing, whether it be you have, regular tenants, whether you're out here providing like transitional housing. There's all types of housing that can be provided for everyone around the world. But the one thing I will say is, when you did decide to get into real estate, if you look on the right side, I have all of these items on the right side. Nobody was out here like, oh, I'm about to be designing all types of websites to get this information about my properties out. You may have said, okay, I want to manage properties, but that may not have also been a top priority for you. The renovation of housing, you're not actually out here swinging the hammer and putting up drywall. You have someone else to do that. The writing contracts, appraising of the houses, and then preparing your financial statements. All of these tasks that I've mentioned all have some sort of expert that can assist you and join your team to help you, manage your business. And that's the biggest thing. Bringing these people on will allow you as a business owner to work smarter and to be able to grow faster than kind of doing all these things yourself. All right, so before we go a little bit further, I want to kind of talk about who I am. My name is Alima Spence. I'm the bookkeeper here at Wealthwood and CPA. I've been here, I think this is maybe my 3rd year. I do focus mainly on bookkeeping. I also prepare some of the taxes. I work with the entity structuring, and I help with the tax planning. I know Wealthwood has helped over 5,000 people like you online and offline with preparing their taxes, working in this real estate environment. What's crazy is I think I met maybe it was like 4 years ago. She probably doesn't remember. I was at a RIA meeting, and it was a CPA talking, and I kind of kept her information. And then, a year and a half, 2 years later, I contacted her to see if she was in need of a bookkeeper, and it just so happened that she was. So that's how she and I kind of got connected. When I'm not doing the books or working, I spend time with my family. I enjoy gardening, swimming. I'm looking to get more into real estate investing. My husband and I, we have one property out in Virginia, in Dinwiddie County, Virginia. That's where we're from. So we have one rental property there, but we're looking to gain more as we go into this year and then the next year, so we can kind of leave something back to our children, once we all pass on. All right, so like I said, today we're going to just talk about some tips, kind of give you a little bit of idea of how things should be reported. And while I'm going through this, so again, I do the books and I do the taxes. And these are the large things that stand out in my brain when I'm doing the taxes, taking the information from people's books. I'm like, well, this probably shouldn't be reported like this. Small things like that is the reason why we wanted to kind of come to you today and give this information, so you'll have a bit of understanding, and that way, once it is time for you to start sending things to us to prepare your taxes, everything's kind of recorded where someone doesn't have to say, hey, you need to go back and fix this because this wasn't really recorded right. In order for us to be able to go through and complete the taxes. All right, so again, it's just 6 tips. I'm not going to go fast. I'm not going to go too slow. I'm just going to kind of explain as many things as possible. Again, if you have questions, please hold them to the end, and we'll go through some of the questions at the end. And I also have my contact information at the end as well.
Yeah, sorry, before she goes on, if you have questions, just put it in the chat. If I'm able to respond really quickly, I will. But if it's something that we want everybody else to take advantage of, we'll wait and address it when we do the LOQ. And for me, I'm here because I just want to save a bunch of money on my car insurance. So that's it. And I'm sticking to it.
Car insurance.
All right, ready? All right, so just starting out with tip 1. Tip 1 is, and I'm not going to read, I'm a former teacher, so I'm not going to read all the slides. I'm going to talk about the slides. You can read it, but I do want to, these are kind of the points that I want to hit. So again, tip 1 is you want to keep consistent maintenance of your records. I know as real estate investors, business owners, we all are out here with a very limited amount of time where you have to be able to do everything that needs to be done. And sometimes, it may seem like bookkeeping, you can kind of let it slide, but it needs to be something where you're kind of consistently, even if you take, 1 or 2 hours a week, just to kind of make sure everything's entered. So that way at the end of the year, you're not scrambling, trying to do what needs to be done in, 2-3 hours, which you could have done over the course of the year, just a little bit. A little bit always goes a long way when you're doing things. If you wait until the end, of course, it's then going to get overwhelming. And then you're like, well, I don't know if I remember, you may forget about receipts, you may lose deductions. And the biggest thing at tax time, nobody wants to pay more than they're supposed to pay. But in order to not pay more than you're supposed to pay, you have to accurately and consistently keep track of all of your expenses, all of your income, and you have to keep track of them in the correct categories. Understanding some bookkeeping practices, understanding that, at the end, your income minus your expenses is your net. Just using software, technology is everywhere. You want to be able to use some sort of software. I think it was Lori who said she used Excel. And Excel is good, but once you get to a certain level, Excel may take more time than you have, because Excel is a more so manual. Everything you have to enter it manually, you have to kind of reconcile it manually. Whereas if you use some accounting software, then once the information comes and downloads in, you can code your transactions and you can reconcile really quickly. All right, so tip 2 is to maintain a separate and personal business bank and a credit card.
Before you move on, can I chip in real quick on number 1? Just know that all this money that IRA has been dishing out, they coming for their money. And guess who they coming after? Business owners. So with audits are on the rise for small business owners, IRS, they want their money, they come in. If you have anybody that you paid more than $600 to and you don't issue them a 1099, if an audit comes up, it will be disallowed. I know some people say, what if they don't want to give it to me? Or what if I didn't get it on time? Just try your best and make sure that you document that you did try to get it, but just know to do right going forward. But if an audit comes up, they are disallowing it. So they're coming down really hard on small business owners. So you definitely want to make sure that you're maintaining extemporaneous records that the IRS can verify and know that you're operating your business in a professional manner. So if you say, okay, I just have a shoebox of receipts in this day and age of neat receipts and Excel spreadsheets and QuickBooks, and where you can hire a virtual assistant, you can hire a bookkeeper, such as Alima. These kind of things have issues. So these are things that you want to be aware of. I'm seeing some comments about the slides are being cut off, and so they want it to be made a little smaller so they can see, and then somebody's saying they're seeing the whole slide. So let's see.
Let's see it.
All right, so somebody said
It's the view options.
Go ahead, Tisha.
Doing the 1099s.
Sorry, it's the view
for people like
options.
Dennis,
On the top of the screen, they can zoom in full screen, 50%, 100%, and it'll all fit. I had the same issue.
Because if you get
I see
audited,
the full
IRS will
screen.
disallow that expense. That's what she's saying.
Somebody said something about disallowing an expense.
Okay, so go ahead and share your screen again. Let's see if that works now.
All right, hold on 1 second. All right, is that
better, guys?
that better?
I can see the full screen, so I'm not sure. Yeah.
Okay.
That's good now?
Yes, they're saying good. So we can keep going and then we'll answer some questions at the end.
Okay, hold on one second. I do need to. When I stopped sharing, I messed up my presentation. So see. Okay, all right, so we're back. All right, so tip number 2 is to, like I said, maintain a personal and separate business bank and or credit card accounts. Now, and I looked this up and I wanted to make sure the IRS does not require you to have a separate bank account. What they require is you have to have separate books. But if you put everything all in one account, how can you keep separate books? There's no way in the world you can keep separate books. And that's, it's going to take you more time to be piecing together. So this was personal on this day on January 1st, I went out to eat with my friends. And then on the 2nd, all that was business. It's going to be harder for you to maintain the books if you're commingling everything. So you want to be, the easiest way is to keep your personal and your business separate. I know some people, I talked to a client today and she said, well, sometimes I have problems, where I may use my business account for a personal transaction. And a one-off transaction is not going to be, in the event of an audit, it's not going to be that big of an issue. The issue is going to come in where you're using this every single day because, you're pulling out the wrong card. I've heard it happen. I don't understand how all of the time, but when you're out and you're doing business transactions, using that business card is the easiest way for you to keep track of the transactions once everything starts to download into your software, or if you're using Excel to type it up. It's easier, and in the event of an audit, it's one simpler way for you to be like, all right, so these are all the transactions I have for business. Also, the problems with mixing the commingling the bank accounts is what we call it. It's called piercing the corporate veil. So in the event of an audit, or in the event that someone is suing you or something like that, if the plaintiff can convince the judge or whomever that your business and personal accounts are not truly separate, that opens you up to all of your assets, personal assets, business assets, being pulled into, if you're having to, to count as an asset, to count as your asset. So let's say someone's suing you and you have a personal home, when you have a personal car, all of these things are yours that you use personally, but someone sues you because you're mixing your transactions. They can say, oh, well, this house is, this house, we can put this house as an asset that we may be able to use to pay for, in the event of this, the person, the plaintiff or whomever, gets the, what's the word I'm looking for? Gets the,
A judgment, like the judgment.
A judgment.
Yeah.
Again. And it didn't have to happen if you were keeping your account separate. Because as long as everything's separate, they can say, all right, well, this is all my business accounts. My personal accounts, because I'm not using them, these should not be a factor in this judgment. To get this personal business bank account, it's not a huge ordeal. You just, you need your EIN, you want to have a business name, you want to have, you might need operating agreement, depending on what your entity structure is, will depend on what type of documents that the bank will require. And sometimes it even depends on like what bank you go to. Because some of them may not be as stringent on document requirements, whereas other ones, the smaller ones may be. All right, so then tip number 3 is reconciling your bank and credit cards. I know this is a big one for everyone. Everyone that I talk to has an issue with the reconciliation of the bank accounts and credit cards. And people are always like, well, I don't understand why I need to reconcile. And the reason you reconcile is because you want to be able to find any errors. I'm sure because we're, all in the real estate world, you've heard that saying where someone says you always measure twice and you cut once. And the reason why they measure twice and cut once is because they want to make sure that when they actually cut this piece of wood or whatever, they want to make sure it's correct. And in order to make sure it's correct, they have to do that measuring twice. The reconciling part of the accounting process is your measuring twice. It allows you to find errors. It allows you to find duplicates. It allows you to find missing accounts, missing transactions. Because what happens is if you're taking your bank balance and at the end of the month, your bank balance says you should have spent $100,000 in deposit, in transactions, and you had maybe $200,000 in income, at the end of the month, your balance everything should zero out. So whatever you had at the beginning plus all your income and assets, it should give you a nice round ending number, which will be on your bank statement. It's not something you have to calculate yourself. You just pull out your bank statement, use your ending balance, use whatever date is on that bank statement, and you have to pay attention because there are some banks that while the end of the month is the 31st, all their statements run on the 30th, or all their statements run on the 29th. So you need to make sure whatever date that statement says is the date that you're using to reconcile your accounts. I like to, and a lot of people don't do, but I like to reconcile any balance sheet accounts, which is your bank accounts, your credit card statements. If you have any loan accounts, you can reconcile those loan accounts. You can reconcile your equity accounts. So if you have an owner's equity account, you can reconcile those. And know the equity accounts will be kind of based off whatever records you have on how you're keeping up with your equity. Your tax liability accounts, if you have employees, and if you have employees and you are, if you have employees and you want to make sure that the tax liabilities, your payroll taxes have all come out properly and have posted to the correct account, you can reconcile those accounts. And any balance sheet account are the ones that you can and should be reconciling. At a minimum though, the bank statements, the bank accounts and the credit cards, because those are the ones where you have the most of your transactions flowing in and out. And those are the ones that you want to make sure that you're not counting too many expenses to where you are overstating, to where your expenses, your total expenses are higher than they should be. Those are the ones you want to make sure that the income that you thought you got for this period is the income that you actually receive. And, with technology is wonderful. There are some times when technology doesn't work. So that's another reason that you want to reconcile, because I've had clients where the bank account will disconnect in the middle of the month. And then once it reconnects, so once you go back in and reconnect it, there are missing transactions. So it may not pull in transactions for 3 or 4 days. If you don't reconcile your accounts, you won't know that these transactions are missing. So now you're out here hunting trying to figure out what happened. And what happened was a whole 3 or 4 days, 5 days of transactions are all missing. So now you're having to go back through and re-enter those manually. All right, so next one is the tip number 4. And this is what Abera was talking about earlier, the 1099s. We want to make sure that if you have a contractor, this person is actually a contractor. And it's a big debate. Nobody wants to pay the payroll taxes. It's so much money. But this is not something that you can decide. If you have certain controls over this worker, that person has to be considered an employee. Did you want to, because we just had this same kind of situation, did you want to kind of jump on that?
Yeah, so the main thing is a lot of people, because you don't want to, pay like the payroll taxes and you want them to deal with it, then you say, hey, I want to classify the person as a 1099, but it's not really within your control. We just dealt with a client who could not understand why they had to classify their employee That's why they could not classify their employee as a contractor. And we said it's not just about what you want, it's about what the IRS rules require. They actually called Department of Labor Licensing and Regulation because they're like, oh, if I treat them as an employee, then that means that I have a business, but it's not, you know, it's not really a business. So these little things, you know, make us feel that we don't have these requirements, but there are requirements. If you have to control, you know, what they do, how they do their work, their hours and all that, they're pretty much an employee and you're responsible for filing. And actually we've seen instances like, you know, I'm on several online groups, social media groups for accountants, and where you know, people are coming to prepare their taxes and they're saying, oh, my employer gave me a 1099, but I'm an employee. What am I gonna do? And some of them, it's because the employer forgot to file the payroll forms. And they're like, oh, we'll just give you all the taxes back that we withheld and just do a 1099. And that's not right. And they're encouraging these people to actually report it to the IRS and file a form saying that you should be an employee. Let me tell you, not before self-employment taxes, the big problem that you could get into with the IRS is messing around with payroll, any kind of payroll taxes, because guess where the highest amount of income comes? I actually have it on my sheet here. I'll look it up shortly. The highest amount of income that the IRS generates comes from payroll, you know, payroll taxes. So don't mess around with the payroll taxes. And there's forms that the employees can file to say that you treated them as an independent contractor. We actually had somebody where it was 3 years later that the IRS came after them and said, hey, somebody reported you that you said that they're an independent contractor. So they started asking for proof and all that. At the end of the day, they still had to go back and file the 941s, pay it. And then once you file the 941s late, now you're hit with all these penalties and stuff for not filing it early. So, I mean, the goal of every business is to make money. The goal is to grow. The goal is to be able to come to the point where your business is no longer self-employed, where you have a business system. So it's good to start getting used to things that you need to do as a business owner. You know, so there's nothing wrong with having employees. Yes, it may cost you more money because you're having to pay 1/2 of their self-employment tax. But the whole goal of doing that is because their availability and their time is supposed to generate more income and revenue for you. So look at it from a business perspective, not necessarily from compliance. So I don't want to do this because I'm having to pay out much. Just factor that in your calculation of what you're doing and just do it the right way.
Right, exactly. And because of that, like she said, that person should allow you to generate more income. So it's not like you're paying this person out, but you're losing money. That person or those people that you hire on or you bring on, they should be allowing you to grow, and they should be allowing you to bring in more of the money that you need to do to be able to pay them properly. All right, so and I'm going to go ahead and go. So tip number 5 is just the classification of expenses correctly. So this is one of the things that I know that when they're doing taxes in the office, I get a bunch of emails saying, can you contact, such and such? They need help categorizing their expenses. So some of the things we're looking for when you send in expenses, you have your general expenses and then you have your property expenses. So the general expenses will be things like your taxes and licenses for your business. It would be, let's say you had like some sort of legal, you had someone write up a contract. That's a general expense, and that's specifically for you to be able to run your business. Versus your property expenses, these are the expenses that you need to, to manage whatever property you're doing. So if you have a rental, the insurance that you have for that rental, the taxes that you have for that rental, if you had any sort of maintenance, like lawn maintenance. Now we'll talk about maintenance and improvements in a second, but if you had any like lawn maintenance, or you had someone coming out to, to maybe rehang a door or fix a window, things like that, those will be on your property expenses. When you send everything in, again, like if you use an accounting software, we use classes to kind of break things out. So in QuickBooks, I use QuickBooks Online, and we break we break the transactions out as the general expense for the business, and then we'll break them out as an expense for each property. And that's the good thing about using the QuickBooks Online, because if you have 4 or 5 properties, you can kind of code each transaction to wherever it needs to go. Going to the next one, we're talking about the maintenance versus the improvements. You have to make sure that you understand what is maintenance and what actually is an improvement, because not all rehab or not all work that you do, you'll be able to fully expense in that year that you have that work done. So for example, if you have a rental property and let's say you had to have the roof repaired. That roof repair, you would not be able to fully expense 100% that roof repair in, let's say you did it in 2021. In 2021, that type of work, it's considered an improvement. It adds more value to the property. So what will be done is that property, that roof repair value would be capitalized and depreciated over a period of time. And it would go on your taxes. So you'd get a small deduction each year on your taxes versus taking that larger deduction in the year that it happened. I had a client that she just bought she bought an Airbnb, and she was thinking, oh, she said, I spent like, I think she said she spent like $150,000, and she was like, I'm thinking I should better get a nice huge deduction. I said, all of those are not going to be able to be expensed this year. I said, those are improvements that you did. You didn't do any type of like regular maintenance. You improved that property because she bought it on auction. I said, so you need to talk to someone. Your tax professional. I said, because I don't know who that you were, talking to before. I said, but that person should be able to let you know where you will better draw the line on what you can actually expense for this year versus what you'd have to put on your balance sheet as a depreciable item. Also, you want to make sure, so if you have a property that you purchase and you want to make it available, when you make it available for rent is when you can start taking that deduction. So if you had something and you purchased it November of last year and you did a little bit of work on it, but it wasn't ready until January 2nd of this year, then you will be able to take that deduction for this year's taxes, which is the 2022 taxes, because the property was not available in 2021, so it would not go on your 2021 taxes. We already talked about, maintaining the rentals by class. And again, you just want to make sure that when you're classifying these expenses, you are, you're working towards to make sure your net income, your gain and loss, everything is correct. And you don't want to miss any deductions on your tax return. Nobody wants to miss deductions and think that, they left something off. All that goes back to the maintaining your proper records. Once someone have a question, all that goes back to maintaining your proper records. Does somebody have something? All right, and then my last one is just the tracking the expenses on the flip. So the way we like to do it is the flip is an asset. It's like you're putting together a widget. So when you put together this widget, it's something that you purchased. So it's inventory. Everything that goes into working on this inventory, once you sell it, now turns into a cost of goods sold. So when you're doing a flip, all of your acquisition costs, your rehab costs, your repair costs, your holding costs, all of those items go on your balance sheet. And then once you sell it, you take your sales revenue, and then you take all of those costs turn into your cost of goods sold, which is your expense. Then you take everything from your balance sheet to move it to your cost of goods sold. This helps out because if you have a property that overlaps into a new year, now you're not having to pull things out to say, oh, well, this wasn't, this property's not ready because it's on your profit and loss. It makes it, it's a bit cleaner because it's only properties that have sold and are fully 100% finished that are showing on your profit and loss. Whereas anything that you're still kind of working on and have a work in progress, they're on your balance sheet because again, they're all inventory. Because they may, you can't expense it until you sell it. And if it takes you 2 or 3 years, then you have those 2 or 3 years to kind of on your balance sheet because you can't take that expense. So this was everything that I had. Does anybody have any questions that we can kind of go over?
Yeah, so I can start addressing some of the ones in the chat. Thank you so much, Alima. Let's put our hands together for Alima. Better her doing the bookkeeping than me. Ask me any tax question all day long, but I'm always intimidated. I know how to do bookkeeping, but I just know, let Alima, she can do her thing, and then I'll stick with the taxes. So the question about the class, when we prepare the tax returns, even for cash flow, you want to maintain each rental property by itself. So when you're preparing your QuickBooks bookkeeping, we want to see each rental property separated in its own, whether its own tab or a class, it needs to be stated separately. So property A, B, C I just need to see just the rental income and the rental expenses just for that property. And then when I'm working on maybe property 1, 2, 3, I want to see the expenses and income just for that property. So when we talk about recording properties by class, rental properties, rehabs, we want to see all of the income and activity for that property on its own sheet or tab or its own column. Because a lot of times, yes, I have some of you who would actually send us everything combined, but we need them separated. One, you need them for cash flow. You need to be able to see how each business is doing, each property is doing, on each rental property, how they're performing. But also for tax purposes, we have to report each property separately. So that's why it's important to have it by class.
And I'm gonna share my screen one more time real quick, because I know sometimes I'm like a context person, so I like to see why things have to be the way they are. So this is this is the partnership return right here. So if you see, these are all your general expenses that pertain to your business. But when you have rentals, it's a separate form. I don't know if you can see this. And it looks just like your Schedule E. You list your properties, and then you have the expenses for each property. So that's why we like the things to kind of be separated, because one, it's a little less work. And if you're someone, the more work someone's doing, they're like, well, if I have to do all this extra, then I have to raise your fee. Nobody wants their fees raised. So the more work that you can kind of do on the front end allows, the rates not to go from 0 to 100 extra percent the next year, because they're like, oh, last year this person came and we had to do an extra 25 hours of work because we had to figure out all of their numbers. You come with it, if you come with it organized, then it helps us out in the end when we're trying to do things on the back end. So I just wanted to kind of show that. I meant to put it in my slide, but I like to see where things are going so I can kind of understand, well, how come they wanted it like this? Because not everybody does understand that.
All right, so I'm just going to read out the questions here and then we can open it up. If I employ a minor, he is claimed on my taxes as a child, I have an LLC, will he see a 1099? No, you don't. Technically, you don't have to issue a 1099. Technically, he's considered an employee that you need to have on W-2. Here's the benefit of hiring a child in the family business. They don't have to pay any payroll. There are no payroll taxes when you employ minor children. So you actually want to have them as employees, because the benefit of doing that is that they can use that money and contribute to a Roth Ira because it's earned income. Can you imagine the benefit of being able to contribute to a retirement account but not have to pay any earned income tax, like the self-employment tax? So that's something that you want to look into. So yes, you may not necessarily need to issue a 1099, but it's good to have them as an employee. One, they avoid the payroll taxes, but they're able to start building up their retirement account. Because a child under 18 working for a family business does not pay payroll taxes. Okay. And then keep going. If you have a building with 10 units, each unit must be maintained separately. No, if it's a building, it's one. So let's say you have property 1, 2, 3 that is a duplex. You want to maintain each unit separately because duplex has separate tenants. But if you have a commercial building where you have an apartment building that has 10 units, you don't need to maintain it separately. Now, if you want to, because for tracking purposes, or if you're in building, like if you're using the property management software building, you want to track it to see how each unit is doing. But for us, we don't necessarily need it as separate units when we do the tax return. We just need each property address as a class and not necessarily each unit as a class. If you miss a deduction or a year of depreciation, do you miss that year altogether or can you catch up? Yes, you can catch it up by doing a revenue procedure adjustment. You can request a Rev Proc 3115 to do an adjustment to depreciation. But guess what? Please, this is very, very important. The IRS, if you get audited for your calculation, the calculation is not based on the depreciation that you deducted. It's based on the depreciation that you were allowed to deduct. So if you did not deduct it, that's on you. But if you're allowed to claim depreciation and you don't, and an audit comes up, they're going to calculate it as if you've already deducted it. So let's say you missed the depreciation, you don't go back and do the depreciation adjustment and the revenue procedure 3115 for an accounting change method to change the depreciation. But if an audit comes up, they will calculate it based on how much depreciation was allowable from the time that the property was placed in service. So it's very important that, yes, if you don't take the depreciation in the year, you can go and do a catch up. What form is that for rentals? Is it Schedule E, Agnes? So if you're filing as an individual, it's Schedule E. If it's a partnership, it's an 8825. And then if it's S Corp, same thing, 8825. Oh, thank you, Laurie. See, Laurie is a tax accountant. She got it. She got to it before me. All right. So
I think somebody asked a question about the difference between an improvement and a repair. So an improvement is anything that's going to add value. So if you install a new air conditioning, you renovate a kitchen, renovate a bathroom, replace all the windows, that will add value. Versus a repair would be painting a room, changing the doorknobs, replacing smoke detectors, replacing a floor tile, not the entire floor, but just let's say you had cracks in your tile and you wanted to replace a couple of them. Those are repairs.
all right, before we continue on, I want to introduce another accountant that works with our team, Moses. Moses, are you there? I want him to join the panel in case he has things that he wants to contribute as well. Moses, welcome. Thank you for joining us. I know you guys are crazy busy and I pulled you in here, but if you can share your video, then I can add you on. Continuing on, I have a rental in Georgia that I refinanced my primary residence thinking I could write off the interest, but I used the rental income from the property to pay the mortgage. How does that get classified? So I have a rental in Georgia that I refinanced my primary. So you can do the interest tracing rules. You can use the interest tracing rules for that. And to use the interest tracing rules for that, you really would just be reporting the interest that would be allocated to the primary residence versus the interest that's allocated to the rental property. And then you can do your deductions that way. So even if you refinance and everything is recorded as one, you can use the interest tracing rules to split the interest amongst the different properties. Okay, so welcome, Moses. Thank you for joining us. All right, so let's keep going. How would I classify an Airbnb arbitrage within QuickBooks? Paying monthly rent and also paying furniture as well as management fees. Alima, that's just a regular class, right? That would just be an expense.
Yeah, that's just an
fee,
expense.
yeah.
Because you're paying, this is paying, so they're paying you you mean the monthly rent, what is this? Let me see. Paying monthly rent, also paying for furniture as well as.
Yeah, I think
So
that's
the
just an
expenses
expense.
are expense. When you say
Yeah.
paying the monthly rent, are you paying the rent to someone?
So what they have is like a sandwich, it's like a sandwich array, it's like a sandwich lease, but they're using, so they're renting, right? And then they're turning around and using it to do Airbnb. It's just a sandwich lease that they're
Okay.
doing an
Yeah,
Airbnb on. So yeah, that is a valid, ordinary and necessary business expense. So yes, that would be picked up as an expense for the business. By the way, I love all the different, there's about 16 real estate strategies out there. I used to do a sandwich lease when I had a contract with the embassy to supply homes for their foreign nationals that come to visit. So it's the same thing. I did it as a sandwich lease. I'll rent out our property and then I'll furnish it and then turn it out and rent it out to the embassy for like $500-600 monthly cash flow. It's amazing all the possible real estate strategies that are out there. All right, so when you're done using a vendor, an account or class, is it possible to delete them or does that mess up the books going forward? I'm trying to clean up my QuickBooks. There are lots of vendors, classes, and accounts that I'm not using. All right, this would be you, Alima.
As long as it doesn't have a balance in it, you can make it inactive. And so once you make it inactive, it just hides it, and so it won't show up on the report anymore. So it's not, it won't mess up anything. It doesn't delete it, it makes it inactive and kind of hides it.
All right, is there a minimum number of units to classify as a commercial property? Isn't it, didn't they say it's like 4 units? Yeah, thank you, Nancy. Yeah, 4 units or more is commercial. Then if it's under, so it's either a duplex, a single family duplex, triplex, quadplex, and then it starts getting into commercial. All right, separate books for each one. I think I'd already answered that already, Agnes. It's your choice if you want to maintain it separately. When we file the tax returns, we just pick up just that one building. So we're doing it based off of the property address, not just how many units that you have it. I now just organize the books as a building and not by each unit. Want to make sure it's done right. Okay, no, that's fine, Agnes. That's why we're here. I encourage you guys, Alima, if you can go ahead and put your information in the chat, also our phone number. You can reach out to us. I encourage everybody, even if you're doing your own bookkeeping, even if you have a bookkeeper, please make sure that you're scheduling a consultation with us to do a consultation with Alima, because there's a lot of things that the bookkeepers know to do from their perspective, but there's nothing like working with a bookkeeper who is real estate friendly. I see Moses nodding his head. You want to talk about that, Moses, in your experience, why it's good to work with a bookkeeper who's focused on real estate?
It's very good to do that because it actually helps take a lot of stress off the real estate investor, so that you wouldn't want to say, okay, how do I do this? What do I do? It's always good to hire a professional to help an individual out. So, because a lot of times, as a real estate investor, you're not supposed to learn bookkeeping. You're a real estate investor. And, you could save your time instead of trying to understand the bookkeeping, hire somebody who's experienced, like Alima, for example, hire somebody who's experienced, and then you could use your time to get more investments. So yeah, it's definitely good to get a professional.
Yeah, so Marquise is a realtor. He's our residence realtor. I refer our clients to him. Marquise has officially said, you're wrong, Iberi. 5 or more units is considered commercial. Well, excuse the heck out of me. That's why I got you on the line, Marquise. So that's the word. 5 or more units is considered commercial. Thank you, Marquise, for correcting that. If I'm a realtor and also have investment property, should I set up 2 separate companies in QuickBooks? Not necessarily 2 separate companies, but you can set it up by class. So the realtor business can be a class on its own, and the investment property can be a class on its own. Now, if you have 2 different LLCs, maybe setting it up separately, but if they're all under one one company, you can separate it by class. All right, was this session recorded? Yes, Dennis, we have it recorded. We will go ahead and send a blast. So Alima, just remind me tomorrow to go ahead and send it to those that registered.
Okay.
All right. Okay, so I got all these brokers now trying to act. Let me ask you, what is section 1.461 of the Internal Revenue Code? See, you don't know that part. So y'all leave me alone. Coming from a broker myself, this is correct. Okay, Miss Mac, thank you. Thank you. Okay. All right, let's go on. Roth IRA for the minor. Is there a particular way this has to happen? Example, would it have to be accomplished via the business account or set up through the, no, you set it up through the minor's account. That's why them getting a paycheck that goes into their account. And then from their account, they can make the contributions to the Roth IRA. I'm telling you, there's a lot of advantages that you get by having your kids work for the company. One, you're teaching them the family business. Two, you're teaching them financial literacy right now. Three, you're helping them set up IRA accounts. You know, my kids have IRA accounts. They have maximum funded life insurance that they can access. And actually their goal this summer is to actually purchase their own property. And I have Bridget on the line. Bridget has done very well purchasing. She lives in New York, but she does a lot of rental properties in North Carolina. And because Maryland is so expensive, my kids are going to go purchase properties with her in North Carolina this summer. So it's good to start these kids very, very early in the real estate business. All right, so let's keep going. Hold on. Okay. Okay, get investment property. Yeah, so there's great investment property prizes in Georgia too. Thank you. All right, so I know we're getting ready to start wrapping up. If anybody has any questions, feel free to unmute yourself and you can ask a general question. If you have a tax question, if you have something that you want either of us to answer, please, you can go ahead and ask it now.
My question is like somebody like me, which is self-employed and do like three wholesaling deals last year. What is the best way to handle that?
Okay, Alima, you want to take that? He's asking, he did 3 wholesale, his self-employed did 3 wholesale deals in 2021. How does he handle that from a bookkeeping perspective?
Oh, okay, from a bookkeeping perspective, usually at 3 wholesale deals. Was that all you did? Like, did you have any? What type of expenses did you have? Did you have a lot of expenses? I'm sure it wasn't anything monthly. So I'm thinking if it were me and I had 3 wholesale deals, because I read up on the wholesale, I would probably honestly keep it in Excel, because it's not, now if I had reoccurring monthly transactions I would definitely use the software. But if I just had that income coming in, once those 3 properties closed, and I wasn't like renting any of the properties out after, I was strictly just wholesaling them out and getting my assignment fee. And I had a few expenses kind of throughout the year sporadically. I would just put them in Excel and keep it like that if it were me, because I don't want to have to pay extra for the software if I only have 10 expenses for the entire year, and then those three income sources that came in, those 3 checks that came in.
Yeah, I agree. It's kind of like a graduated thing. So you start out with Excel. Everybody can start out with Excel, and then as your business starts to grow, or as Moses said, you want more time to yourself to do your business, then you start looking at transitioning. We started out with Excel. I even used to do my payroll in Excel, file all the 941s. But as I grew, I started transitioning out of that, pay a payroll company, pay a bookkeeper to handle all that so that I could focus on the business. So yeah, if you only had 3 wholesale deals, some people keep really good books in Excel, so I'm not knocking Excel. It's just that when it comes to me, if that book look like it's in a coma, we gonna have problems. But if that book look like it's okay, I'm fine with using Excel. And usually we would advise you, once we're done filing your returns, if you need to scale up or down. On a flip, it's account type inventory, then sale goes on cost of goods sold. No.
Yes, the inventory,
Yeah, explain
everything
it,
is the
Alima.
inventory. And then it's one journal entry to move all of that inventory pieces to your cost of goods sold on your profit and loss.
All right, Pamela said that her bookkeeping is in a coma. I don't know about that, Pamela. That's gonna be like extra $1,000. Okay, so Kyle asks, do you have recommended templates or strategies in Excel? We just have a standard Excel spreadsheet that gives you all of the expenses and then the income at the top. So we have like a sample rental workbook, sample business workbook. We have a capital gains worksheet. I can send those 3 to you. But Alima, do you have something is it just a matter of exporting like a sample and them using that, like make a chart of accounts or something?
So I think it would I would need to know what specific, like what you were looking for, Kyle. I am an Excel like crazy person, so I do pretty much everything in Excel. So if I can find an Excel spreadsheet to help me do whatever I need to do, then I'm sure I probably have it. I just need to know what you're looking for, and then I can say, I can share something with you that I'm sure I have, because if you ask anybody who knows me, I've been doing Excel, I've been saving Excel spreadsheets for like the last 20 years, because I just don't like to, after we got away from the adding machine, the Excel spreadsheet is now my adding machine. So I put everything in there. If I can't add it in Excel, then it won't get added up, because I don't like to use regular calculators. I need to see everything in a list.
Yeah, she's better in QuickBooks than me. Yeah, exactly, Laura. She knows how to do them pivot tables and stuff, and yeah. So try to reach out, send that, Kyle, you can send Alima an email to tell her specifically what you're looking for, and then she'll see if there's an Excel spreadsheet that she has. Ours is very basic for basic, but if you're looking for something that's more tailored towards, something that would mirror what you have in QuickBooks or like a QuickBooks chart of accounts, just send Alima an email and she'll get a copy of that to you. How do you report private money lending? Private money lending is really just interest and principal. So the way that you report it would be that the interest is going to go on the P&L, and then the principal is going to go against the liability. And with the private money lending, there should be an amortization schedule. So usually we would ask for an amortization schedule that shows what the monthly payment is and what the split is between principal and interest. Now, if the private money lending is on a property where you had to secure the property with a lien, just remember that you need to issue a 1098 at the end of the year to the person that's residing in the property. Okay. An Excel that corresponds to the IRS categories that you would like us to pre-categorize for you. Okay, so Alima, please note that. I think that's just simple. I think we can pull the organizer for the business and then the organizer for the Schedule C and just I think that's the way that we have it, but you can ask David so you can review that one and then we can get that out to them. Okay, he wants to see examples, so he's not just flying blind. I think what we can do is to give an example of a rehab, example of a rental, an example of a property that's, rehab, rental, and then a regular business, general business. Amortization schedule if you only make interest-only loans. So if you make interest-only loans, then you don't need an amortization schedule. Amortization schedule comes up when you're doing both interest and principal, and especially if that was through an installmental sale where we have to pick that up on the tax return, then yeah, definitely I want to see the amortization schedule. If there's nothing that's being added to the principal or subtracted from the principal, I don't need an amortization schedule from you. If I'm the private money lender, how does that get classified? It's the same thing I just said. It's interest income to you. So depending on how you're lending the money, are you doing private money on a property? You know, so it's like you gave somebody a mortgage, or you're holding back a mortgage, or if it's something you just gave a loan and they're just paying interest, like on a promissory note, you're just recording interest. And then when they pay it off at the end, then you write it off against your receivable. All right, it's 7:31. Do we have any last comments, questions as we round up? Yeah, so money on a mortgage, you definitely need an amortization schedule, because there's 4 things. We're gonna have the principal, we're gonna have the interest, we're gonna have the taxes, and we're gonna have the insurance escrow. And so the principal goes against the loan account, the interest goes to your interest income. Escrow goes to escrow until you pay the taxes and insurance, and you do need to issue them a 1098 at the end of the year, showing the interest they paid, the principal they paid, and then the taxes and insurance for their tax piece. Okay, so Alima, a lot of people are wanting to see an Excel spreadsheet for the categories, for the IRS categories. I think the best way that we'll do it is just to take the Schedule C and the 1065 and the Schedule E and the 8825 and just do an Excel out of it, and then we can do that as a blast.
Yeah, that's fine. I can do that.
All right, any final questions before I allow people to make their final comments? Thank you, Bridget. So we are planning to do a coaching program with Bridget. Bridget, if you want to come on and talk a little bit about that, that's fine. Otherwise, we'll wait until you're ready. So we're going to be doing a coaching program. She has agreed to coach people because I wanted my children to be able to take advantage of it. She's going to be coaching people on how to buy properties in North Carolina. So she does not have, does she? I don't think she has any properties in New York. Well, maybe she does, but most of her properties, 90% of her properties are not in New York. And she lives in New York and is an out-of-town landlord, and she knows how to manage. Yeah. She knows how to manage the properties. Okay, hold on. Let me look for you and add you on. Okay, Bridget, you can unmute yourself again.
Oh, hello.
Okay, and are you able to start your video or no?
Not at the moment. Actually,
okay.
I'm getting my hair done. Yeah, so yeah, I live, like Barry said, I live in New York. The only property that I do own in New York is my primary residence. Initially, when I started investing, I wanted to take down properties in New York, but because of the price point, I couldn't. So my parents are from the South, and so I decided to start looking in North Carolina. You know, the prices was much more friendlier. It's a landlord-friendly state. If you have a tenant there, they don't pay the rent. You can get them out. Once, you know, the judge gives them 10 days to vacate the premises for non-payment of rent. So I had a lot of positive aspects. And so I started, you know, looking down there in North Carolina, like in some of the tertiary, like secondary markets. And I've been investing there, I would say, for maybe going on a decade now. So my husband and I, we self-manage. I was doing the part-time, well, yeah, I was doing the part-time when I was working part-time as a registered nurse. So as of 2018, I became the end of 2018, I became a full-time.
Congratulations.
Thank you.
I'm sorry,
yeah.
like I didn't already know that, but
Yeah.
I want to be like Bridget when I grow up.
So yeah, so I'm full-time real estate investor now. Also too, I'm a licensed realtor in New York. So I got my real estate license in New York, and I would say the last 2 or 3 weeks, I obtained my real estate license in North Carolina. So and one of my long-term plans is to possibly maybe start like a property management company down here that I can use to manage my properties as well as, other individuals as well too. So that's, my story.
Yeah, so that's one of the great things about this business. See how we're talking about bookkeeping and now we're trying to do some deals in North Carolina. I do want to buy properties because I've seen how Bridget is doing it and she has explained it very, very well. So the kids are going to go down there. My daughter is in Duke. The boys want to move to North Carolina. I'm the only one, my husband and I are not interested in moving. So we do want them to go buy properties there this summer. So we can even do like a bus tour or stuff to, just to see how she does it. We're going to be sending the information. So not to worry, as long as you're on our mailing list or you're in our program or a client, when we get ready to launch it, we'll let you know. I reached out to her. I'm like, hey, what do you think about doing a coaching program? Because there might be people who are here in the East and they want to go down to the South and buy properties. And, so we kind of talked about it. So she's looking into it and to let us know if she's going to be able to, have the time to commit to doing it. So definitely looking forward to launching that program with her. Somebody's asking for your contact information. It's okay if you don't want to give it out, but if you do and you want them to reach out to you directly, that's fine. So Cassandra is in North Carolina. And so she would love to connect. And she's in the Raleigh-Durham area. Yeah, so that's where we're actually looking at, Raleigh-Durham. My daughter is in Durham. Thank you, Nancy. Thank you for coming on. So my daughter is in Durham and we're looking at properties over there as well. So yeah, and I'm from New York too. I was born in New York, right? Oh my God, I've been all over the place. I was born in New York, raised in Nigeria, and then now living in Maryland. So yeah. Okay, so let's go ahead. Let's go ahead and have Alima start doing her final checkout.
Real quick, Bridget, you didn't say anything when we talked like last week. So my son is in North Carolina at school, and my husband and I are trying to buy. He's in Elizabeth City though, and it's way cheaper in Elizabeth City than it is in Rotterdam. So
oh yes,
I'm definitely going to be getting onto this coaching plan too. But I think that's everything. If you all have any questions, please, like I said, don't hesitate to reach out for monthly bookkeeping services, quarterly bookkeeping training, any type of consultations, whatever you need, just reach out. I'll put my information in the chat, and then I'll also send out these organizers in the next couple of days to everyone. But if you have any questions, just let me know.
I'm going to stop the recording.